Okay, here is our market update, broader market update. It is September 13th. And most importantly, we've had our CPI number. As I've been saying in previous videos, that is going to be an important day to watch to see how the market reacts to the CPI number. For what it's worth, it was higher than expected. But more importantly, how did the market react? And the answer is very bearishly. And so we'll start with the S&P 500. And as I often remind, please take a look at the links in the description if you are not familiar with cycles analysis. I also have my previous video for broader market, so you can just get a sense of like the context. A lot of content there for you to kind of digest. And if you're not following me already, follow me on Twitter. I give more real-time updates there. And obviously, if you haven't subscribed, I would encourage you to get notifications for new videos. So on to today, what are we seeing? This enormous red candle, right? And a huge gap down, right? Now that's going to get filled on the way back up. That's going to be fun, right? But that's about a 50-point gap. And so let's just rewind here. This is your 10-period moving average, right? And so we had our daily cycle high on day 40, and then we proceeded to fall for 14 trading days, which, is several weeks when, even especially as you count weekends. We had this move down. I'll actually draw it so that it's very, we had this main move down. Then we had a 2-day bounce, which failed gloriously. Then we had this little bounce that failed. Then we made this low. So this was almost a little bit of a double bottom. And then we made this move here, which was promising because we made a higher high above here, right? Which, and again, I know I didn't mark that as a lower high, but on a lower time frame, it is a lower high. That's important to kind of understand. But we now did this, and we did this. And more importantly, the expectation is that we break this low. I mean, we'll see. I suspect we'll break this low, and we'll talk about that on the weekly chart. But that's not good news because that opens up something like that and then that, right? And then continue the downtrend. So this was a really promising little leg setting up here. But so far, we've topped on day 4. And I got the question on Twitter. It's a good one. Does it mean maybe that this wasn't your daily cycle low and we're actually going to make some kind of double bottom? It's very possible, right? You could say this is the same kind of situation, right? We made that daily, wow, it's actually almost identical, right? So we made that low and then we had 3 days of trending up. I mean, obviously, and I'll zoom in here just to make sure we can see this. And obviously, this was a pretty tough candle to stay long here. Just if you were trying to trade intraday, you must have gotten whipsawed with all this wick. But then you had this move up, and then, kind of similar to today, a big whammy red candle, and then some consolidation, and then a new low, but then another trend leg up, albeit led to another new low. That's important. But you could see a world where we retest this area and maybe hold, maybe even have a slight low below it, and then kind of rebound. That remains to be seen. We'll watch the levels as they happen, but right now we have this big, beautiful gap that's going to be really useful on the way up, on the way back up, I should say. Now, onto the weekly chart. Important. We have it, and I'll actually make that visible. Right, we didn't make a line below there. So on the weekly chart, I keep calling this out because it's important. It's a phenomenon more than it is a pattern. And again, this is something that is, they talk about it extensively in the strat. I found the strat on Twitter. They're there's a ton of like content, free content, mind you. I think there are paid courses. I didn't go deep, but I learned enough that like, oh, this is actually really helpful for like the atoms of price action analysis. But now I'm focused on sort of the trend within that, and then obviously understanding how to add cycles just for an extra bit of sort of like ease of like characterizing the trends and the rallies. So for instance, so far we've had our high on week 9, and After we made a swing high, which means we made a low below the low of the candle that marks the high. So that was that move below 42, but below the 4200 area, roughly, right? That's the low from this candle. And so once we made that swing high, we had follow through and then another week of follow through. So this told us very likely the weekly cycle decline, has begun, especially as we sliced through the 10-week moving average last week. Then we got this big bullish outside weekly candle. So it's a really, really important pattern to understand, where we make a new low relative to the old candle, but then we go green and we make a new high. So once we've made that new low and you see we start to go green, and you'll start to see this everywhere, that means we are potentially on our way to becoming a bullish outside candle. Doesn't mean the pattern has to always complete. Now this is happening exactly this week on the reverse. So we made a slight new high above this candle. It's always in relation to the previous candle. And what do you think happens by the end of this week? We have 3 trading days to go. I suspect we make a low below this candle, which would put you in the 3886 area. So below 3900 at this point. That would be the expectation. Now, that would be pretty, can you imagine that? We have a bullish outside candle one week and then a bearish outside candle the very following week. What that tells you is it's more bearish than bullish, because the final move is that bearish outside candle. Not to mention, if you think about the trend, again, thinking about how we looked at it on the weekly, on the daily, we just made this down leg, and now this would be your lower high. So we would expect a lower low, another lower high. Markets don't go down in a straight line. And given that we're in week 13, again, I mentioned this in previous videos, the last cycle was 16 weeks, which is a pretty short cycle. And again, I think cycle counts are a little bit less important than the price action itself. If we had this really big downdraft that almost ended kind of early, you could say, right, we kind of bounced out of it eventually. We almost kind of ran out of sellers. Obviously, there were some fundamental catalysts that made people feel like they wanted to be long as well. Now you have to ask yourself, are we starting a protracted, if we had this short cycle, are we now going to have a longer period? So this is week 13. Maybe this one stretches out to 20, 25, maybe even 30 weeks. If it's going to be left translated and week 9 is the high, then we would expect that the weekly cycle is going to be at least 18 weeks, right? Because if we rallied for 9 weeks, we need to decline for more than 9 weeks for it to be left translated. And so again, this is setting up to be the start of the next leg lower, right? So this was our first leg. We had a little lower high, and now we're beginning the next leg, is the assumption. That all starts obviously by completing this pattern. Maybe we get a rally for the rest of the week and we build an upper wick. That would be kind of your best case scenario. That's one of the things you want to watch for. If you to see signs that we're not having a complete breakdown. And finally, if we look at the monthly chart, also really important just to kind of think about how this all fits into that pattern. We are now well below the highs that we needed to remain above for the June candle to be a swing low. Look at the June candle. The high for the June candle is 41.77. We're obviously below that now, well below that. And so we don't have that swing low in place anymore. And we're also now firmly below the lows from last month. We are literally in a downtrend on the monthly time frame, which means we're on a downtrend in all time frames. And again, if we flash back to the weekly, we had started a pattern of higher highs and lower highs, right? Higher highs and higher lows. So higher high, higher low, higher high. Technically, if we can not break down here, and that's why you want to stay flexible, you don't want to be sort of rigid in a view. You want to react to what the price action is giving you. If we get some kind of double bottom, maybe even some kind of fundamental catalyst that also helps to spur that, we could be off to the races. But it seems incredibly unlikely given this price action. I mean, the market goes down 4 or 5% in a day. That's generally telling you something. That's people kind of running for the exits. And so what that means for this is that this idea of a 3-year cycle low in March 2023 is back on the table, right? That, like, you know, if you think about the trend here, you know, it's like we just made a lower high, right? And so just like to oversimplify, you know, though it'll obviously not happen in a straight line, but like to just kind of oversimplify, that's kind of what we're talking about, right? Like something like that. And again, this doesn't mean like, you know, all of the rest of the months between now and March will be down. We could have bounces in between, but like that would be kind of your general pattern. And it's really the same exact picture for all the other indices. The levels are just different. And, you know, as I always encourage anyway, definitely pull up a chart, take a look at this yourself to get a sense. So they all did the same thing. Big gap down. In the case of the NASDAQ, it's closer to making that bearish outside weekly candle than SPY. It just needs to get to 291 basically, and we're at 293, right? Just a couple bucks, which also just gives you more an indication that SPY is going to get there, or the S&P, the futures. It's all the same. It looks like they're all targeting a bearish outside week, and the same thing for the Qs on the monthly level, just kind of falling over. IWM. So funny. This is important to see these kinds of distinctions. Notice this is the monthly chart for IWM, and it's actually still green. So IWM goes red below 177.50. So that's important to know that level. You know, we're at 182. So do you think we're going to get to 177.50? I do, right? Like if the other indices are already red for the month, I suspect they drag IWM down as well. So this is actually a great opportunity for some kind of put spread, you know, knowing with that 177 level in mind. I'm just going to note that. And if we look at the weekly for the Qs, again, or for IWM, same kind of idea. Yeah, for this, so important to understand, again, multiple time frame analysis, that 177 level on the monthly is the same as this potential swing low that we tried to set here, this like higher swing low to continue the weekly cycle rally. And again, it's possible this week 9 turns out to not be the weekly cycle top, but once we had this move lower, that's what it looked like. And now we're just getting further evidence that is what we have. So we're going to have to see how this plays out. And the last thing I'll look at is the Dixie. My God, what a daily candle. And I'll try to do a separate video about this because I think it's important. My God, it's the same way that SPY kind of like wiped out gains from several previous days. This thing tried to do that like for losses. So it does look like it just printed a daily cycle low on day 23. And this is something I mentioned on Twitter. When it started this decline, you know, there was a big call for like, oh, the top is in, and it still might be in. It's going to open again today, later this evening. But wow, this is quite the candle, and it's just a reminder that I always say this, and it's important to remember. Dixie, like it can move 1% in a day out of like it doesn't move a lot, and then it could move just a few percent, which is a huge amount for a currency, obviously, and then it can kind of wipe out a previous pattern to some degree. And so that's important. If you look at the monthly chart, my God, and I'll try not to belabor the point, but I hope you're starting to see this pattern. This is setting up for a bullish outside month. That would be, or excuse me, a bullish outside week. That would be a move above 110.786. Let's see if we get there. And the monthly chart is just looking like another green month on month 20 of the 3-year cycle. Now at some point this is going to top and it's going to decline, and you see how far stretched we are above the 10 month moving average. But until then, you don't want to fade strength, in my opinion.